I'm so glad you're being proactive in chatting about your retirement. In my role as a financial planner, retirement is what we do. And we take all aspects, all the pensions that we've been talking about for the past year. We talk about the retirement pensions, the government pensions. We put it all together in a way that makes sense for you to hopefully fund the retirement of your dreams, whether you plan to drive around the world in Westphalia for a couple of years, or you spend a bunch of times on cruises, or maybe you want to go traveling once per year on a big trip, or you don't. You stay in your backyard. We need to factor all of those things in when we dream about the type of retirement we want, and then factor the money in after that. We will look at, your pension plan as it is now and what your options are. It can be very, very confusing to figure out which options, especially as you see those dollar figures rise and fall, even considering pension bridges and all of that sort of stuff. We think about CPP. Let's sit down and figure it out because we're here for this. Have you received any pension paperwork yet? Do you have an idea of what that looks like? Did you see the part where they talk about the guarantees for the different years? Like single life 5-year guarantee, single life 10-year guarantee with a partial annuity, single life 15-year guarantee with a full annuity. To see that part, it's generally very confusing. So this is where being proactive is really, really super, because we can go through all of those options that are available to you and determine which one is best. Generally, those guarantees and annuities or not, they're basically looking at, how are you going to take your retirement pension in consideration with your beneficiary, who's going to be left behind if you pass early. And that's where the guarantees start coming in. When we consider annuities, whether they are full or they're partial, basically that's just the way to front load your pension. You might decide to retire before age 65. And if you do that and you have the option for a full or a partial annuity, you are going to pay for that. You receive it at the beginning, but you're going to pay for it at the end. But sometimes it works out for what you're looking to do. So we're able, as financial planners, we're able to take all of that and figure out how that is going to fund that retirement dream of yours. Sometimes also at different companies, you're able to get a CPP bridge. So the Canada Pension Plan, as we've talked about before, is a benefit that comes based off of your working years contribution and employer contributions, like all the way through. With some companies, if you retire before the age of 65, they will pay, in addition to your pension, they will also give you a bridge. So that will increase the amount of money that you're going to get from age 60 until age 65. At age 65, that bridge falls off, but CPP begins. And it's meant to just flow nicely through. At age 65, again, is when OAS typically begins. But then when we're reviewing your financial plan, that's where we can say, well, the bridge is fantastic, but actually, it's better for you to take your CPP at age 67. It's better for you to wait till age 70 to take your OAS. These are the puzzles that we get to work on and help you fund that dream in the most beneficial way for you as possible. So remember those locked-in retirement accounts we've been talking about this whole time? This is their time to shine. Now is when we get to start looking at how to draw the money out of those retirement accounts in a way that makes sense for you. So years ago, I talked to you about, there's a minimum and a maximum amount that you must withdraw. When we factor those aspects in, or the aspect of the locked-in retirement account, we take that plus CPP plus OAS. If GIS, the guaranteed income supplement, somehow fit in there, we'd focus on that. And then we take your current pension. We put all of those together. Now, most people at that point would say, oh my gosh, what is that going to look like? What are my taxes going to look like? I'm not sure if that's most people are just financial planners that do that, but we see that income and we say, oh my gosh, taxes, and work to figure that out. One of the difficulties in retirement, especially if you spent, your life saving for this and working toward this, is what can be called an old age security clawback. And that's when you make too much money in retirement, that old age security that you've been receiving simply because you've lived in Canada for a certain number of years after you've turned 18, that starts to be pulled back by the government. So once you reach an income threshold of a certain dollar figure, it changes yearly, Once you reach that threshold, you start having to claw back on the other end. So of course we like to look at the numbers. We like to figure out, the fit the pieces of the puzzle together so you get to keep as much of that OAS as you can while keeping your taxes as low as you can, yet still being able to fund your dream. In the event that your income is just going to be high because you want it to be, well, then we do that. We know what the consequence to the OAS is going to be before it happens. The point is, you're funding the dream as you see it, and you know the steps and what's going to happen as you go through, so there aren't any surprises.